Okay, let's start with the basic building blocks of what technical analysis will help us with. So let me introduce the notion of support and resistance. In order for us to study a trend, we have to start from the stepping stone of a trend. And this is what this is all about. Now, support is supposed to be an area underneath a market that shows heaviness in buying. Normally, when you're looking at a price chart and you see that it rebounds from a low, just like this, or this, then we mark these three areas out to be an area of support. Because what it does is it supports the price. It prevents it from falling. And it's because of that support that it encounters a substantial amount of buying interest that's so heavy that it allows prices to make a recovery. So support casts the prices back and shoots it back up into this recovery rally. Now, what is resistance? Resistance is that area above a market that stops a price from climbing. What causes that stoppage? Well, the heaviness in selling. People who want to profit take or who have said, this price is good enough for me, and so I will start to sell. And so what will happen, as you will see through our course of our lecture today, is that you will see that prices will come through these 2 points many times. They will bounce from support and get bumped off by resistance. And in doing that particular, or keeping that understanding in place, you have to be able to always understand that if I'm looking to buy this market, I should always buy the market when it's in my favor, when I feel that demand will help sustain its ability to climb. So if I were to buy this stock here and I see it going up and down, up and down, up and down, the best time for me to make a purchase here would be as soon as this falls down and rebounds off this supportive area, proving that support is there and that telling me that my underlying risk is now very small because I see that there's enough demand here to protect me and that it has now the ability to recover and make money for me. Imagine if I try to buy closer to resistance. If I see prices coming up and I'm coming towards an area where I've identified in the past that there's heaviness in selling, that means I'll be buying it closer to an area that will stop my price from climbing. And that means my ability to make money has been stunted. So I want to be able to make sure that my purchases are made closer to the supportive area, and I would rather look to take some profits closer to the area of resistance. So normally the lows of a graph will give you that area of support and the highs of a graph will give you resistance. Now it might be easy to look at in a sideways moving market like this, but many times in an upward moving market like this, the support and resistance areas will change. Now remember, support is identified by the low prices that you see here. So in an upward moving market, support climbs. It climbs on every successive low that you see. So if prices are pulling back down from here, you can say, where's my next support? My next support will be here. If this breaks, you can say my next support will be here. If this breaks, it will be here. On the same route, resistance is always dubbed at the area of the last high. So this will be your resistance, followed by this next high, followed by this next high. And so later, when I start showing you how to draw a trend line, you can project those areas of support out over time. And it becomes a very useful tool for us to use so we know where we can actually make our purchases from a stock and prevent ourselves from chasing a stock too much when it's running up like this, because we'd be buying the stock closer to resistance. Now, let's try to give you an avenue of how to be able to understand that degree of support and resistance. So let's go back to our charting app here, and let's just have a look at this. So in our ability to have a look, I have Meralco being shown over here. Now, here's a good sense of support. You can see the three lows that we've been seeing in this area seem to be containing the areas of support quite well. Let's just draw a line here just so you can see what that support looks like. Okay, so it puts a shelf in price, and every time it bounces off here, this is a good time to buy, a good time to buy, a good time to buy. As long as prices do not break the lower end, it's a good time to buy. A good time to take profit is every time it hits the ceiling of this area. Now, one thing you can take a useful look at looking at support and resistance. If the last rally shows a resistance that's much lower than the previous, that could be telling you that the trend is starting to change. and it did so in this particular capacity. So we want to be able to look at this to be able to give us good essence. Let's look at Wilcon in this case. So here's another uptrending stock during this period. And let's also draw some major lows. Here's one low. You can see when it fell here, it also rebounded because of support indicated here. And some of the lower areas we've seen are actually getting higher and higher. So just mark that out for you. Okay. And now with those particular lows, let's just try to draw a line that tries to contain as many of them as possible. This is known as a trend line. We'll talk about this in a while. This trend line shows you where the supportive area is. So it's a rising level of support. And if that supportive area breaks, just like you can see how fast the price started to be able to avalanche down. And so a learning that will come out from here is as long as the price holds over support, you can buy the stock from it. But the minute that supportive area breaks, then the cradle will fall. And it's in these conditions that you probably want to lighten up into your position or get out of the position initially. Now let's talk about the reversal of roles of prices here. Now we have resistance and support here as we draw in the earlier condition. Now when we say the reversal of roles, I want to show you how what once used to be resistance will change its role and become support. So what happens in this particular case is after prices rupture through resistance, this is known as a breakout, and we'll talk about this into our next topic in our next session. And after prices move up here, you can see that there's a pullback in price. This area, this red zone, used to be an area of resistance. But after prices punch over it, this area of resistance changes its roles and now acts as support. The reason for that is because those people used to sell positions here found out that after selling all that they could, the price continued to be able to climb and they missed out on the opportunity. Also, a lot of people were thinking that this was not going to push out because they saw in the past that it managed to be able to hold quite strong. And these people probably got left behind. So they're probably saying, if ever there is an opportunity that prices will come back to this zone, I will use that now as a buying opportunity to try to get back into the stock, or for the new people, a new opportunity to get back in without being too pricey. And so this now becomes a supportive condition on the price. Now, in an uptrending situation that would break, such as this, if this is your rising support line, and prices rupture below your support line, your former support line, after this break, will now be acting as resistance after the rally is actually being shown. So if you've missed the opportunity to buy to sell your position in this crack, then in this next recovery, you probably want to be selling your position coming closer to where this resistance band will be. So similarly, if you missed the opportunity to buy this over earlier on, then you want to use this correction here towards support as your next buying opportunity to take advantage of this. And so understanding the reversal of roles should be able to help you understand when those next opportunity spots can come around to be able to do that. So let's have a look at an example of that in our charting app. So here we have Ayala Corporation. And let's have a look at typical support line. So we draw on this here. There was a support break that you noticed after prices turned around, and a recovery from the price will show you that it encountered resistance at the extension of that line. So here's support now acting resistance, and after that you've seen that eventually the prices started to be able to cascade downwards. So these are conditions that you want to have a look at. Again, this becomes an area of support. After support is broken, in the next rally, this area that used to be support is now acting as resistance. It falls back down. It creates a new support. A new crack takes place. Prices fall down, recovers back to what used to be support, now acts as resistance, and now you have the same thing over again happening and happening. So here's a very useful tip for you. So remember, once those cracks in support take place, remember they change your roles. And so when a price rally comes inside, you can use that as a potential price target so that you know if you still have something to sell, where that you should be selling it closer to. As you anticipate this better, then it gives your ability to prepare for a market to be much more honed up.